China, and the dust is still settling on the reopening. In terms of pent-up demand, it's not really looking as strong as many expected. Where are you putting headline GDP and services sector growth?
So we have the same view, Sri, that pent-up demand in China is nowhere near as big as it was in the US. And it's just because there wasn't as much excess savings and government handouts in China as the US. But we do expect a recovery, and it's coming through. The data just in the last week or so has been generally a bit stronger than expected, including housing market. We're expecting 5.3% growth this year, and we think it will be services-led. And I think that's what the data is showing. If you look at the official PMI, services are quite a bit stronger than manufacturing, although both are recovering.
Do you think then that the initial expectations of 1.4 billion Chinese people spending, travelling, investing again, and that triggering a second wave of global inflation and now, in retrospect, looking misplaced?
Yeah, we were not always in that. We've never been in that camp. We think there's going to be a bounce back, but we've been saying curb your enthusiasm. We don't think this is anything like 2009-10 after the global financial crisis, where China kind of saved Asia and parts of the world with massive rebound and stimulus. This time, the stimulus in China is much less, in our view. I said excess savings is less. And the property market, while it's starting to recover, it has structural problems.
Right.
And I think there is still, it's going to take time to rebuild trust and confidence among the major players in that property
to the structural
market.
problems, you've got these demographic challenges as well, which feed into those structural
Absolutely.
problems, and that is going to continue to keep growth where in the longer term?
I would say it's probably somewhere, if I'm thinking of the next 5 years, probably averaging maybe around 4%.